One of the buzzwords in cryptocurrency in the past several years is DeFi, or Decentralized Finance. Just a few months ago, I needed to set up a separate bank account for a small business that I'm operating. I got online and completed the application, which includes providing a lot of KYC, or Know Your Customer, information such as name, social security number, address, and type of business. I completed all this, but when clicking Create Account, the prompt required that I visit a local branch to complete the process. So I called the local branch and I got the next available appointment, which was in a week. When I appeared for my appointment, I had to wait an extra 15 minutes because the banker's previously appointment ran long. When meeting with the banker, he requested the same KYC information that I had previously input in the web form a week earlier: name, social security number, type of business, etc. He suggested a few bank account options for me to choose from. None of the options had an interest rate that paid me more than 1% on my savings. Only the accounts that required a large minimum balance had any features such as accepting payments or check writing. I tell this story because the banking system is broken. It is old-fashioned. It hasn't changed its business model in decades. However, technology changes this and will continue to lead us into a new way for how we will bank, store our money, lend our money, trade our currency, and invest. The current system, called central finance, is improving things marginally each year with technology called fintech. Fintech, or financial technology, improves things so that the websites get easier to use, can be used on your smartphone, you can take a photo of your check for deposit, you can link a bank account to an investment account, etc. This is all great, but DeFi is making exponential improvements that blow away the old model and will essentially replace banking as we know it. In 2009, a new technology was released utilizing the blockchain called Bitcoin. In 2015, Ethereum was released, which allowed for smart contracts within the blockchain. The term DeFi, short for Decentralized Finance, was born in an August 2018 Telegram chat between Ethereum developers and entrepreneurs. Some DeFi protocols were actually starting to be developed the summer before. In this video, I am going to explore DeFi. One of the core tenets of decentralized finance is that it's decentralized. Take Bitcoin, for example. The original crypto asset is basically a ledger, its blockchain, that is decentralized because the transactions are recorded in databases on many different computers throughout the world. For Bitcoin, the number of systems is greater than 10,000. That single record, stored across many databases, is secured with cryptography, and the computers keep tabs on each other to make sure it hasn't been tampered with. Decentralization is part of what makes cryptocurrencies and DeFi hard to kill. No single party is in charge, so it's nearly impossible for someone to go rogue and change the rules that govern the virtual protocols. Likewise, even if a government manages to prevent a bunch of computers from supporting a specific cryptocurrency, the digital assets can continue functioning because other computers on the network retain a full record of transactions and can carry on running the show. What's a protocol? Simply, it's a computer program that performs a set of rules. For example, HTTP is a protocol that is used by all web browsers to allow us to view their websites. The HTTP protocol takes data that is transferred over internet, then it converts it to a readable format. A DeFi protocol, like provided by Maker, Compound, or Aave, links a borrower with a lender, also referred to as peer-to-peer. We no longer require a middleman such as a bank to do this for us. Therefore, the borrower and lender get better rates. The protocol takes a very small portion as a transaction cost. The old legacy-style bank can no longer compete with this. Let me give you a high-level example. Imagine that we have 5 or 6 large global banks, and they all largely do the same thing. They all build the same banking services. They all spend millions to provide the customers that service, whatever that service is, a lending service, a derivative, a currency exchange, or some other type of equity trading. They are all building and supporting the same functions. This is costly. There are 6 variants of essentially the same thing. Now, in DeFi, you have a single community building a single best-of-class service or protocol that can be used by everyone globally. It isn't focused on 50 things like a bank. It is focused on one thing. Imagine if all the effort and money isn't wasted on 6 separate efforts, but now focused on one best-of-class protocol. This is like the lending protocol developed by Aave, or a trading protocol developed by Uniswap, or a protocol that provides synthetic assets so someone in Africa can buy a share of Tesla. We don't need banks or big institutions to provide these services anymore. That essentially is what DeFi is. The best way to explore DeFi is to jump into one of the protocols that I previously mentioned. Let's look at the Aave protocol. Go to app.aave.com. The first thing you would want to do is connect to your crypto wallet. I already am connected to my MetaMask wallet. If you aren't already using a wallet, then I suggest you do so at this time. One of the more popular wallets is MetaMask. There are several quality instructional YouTube videos about installing a crypto wallet. I suggest you check out one of those videos. Once you are connected to your crypto wallet, you can participate in DeFi. To start, click on the Aave market that you want to participate in. I will select the Aave Polygon market. This will utilize the Polygon or Matic token for fees, and that has a much lower fee structure right now than Ethereum. Now you can view the types of assets and the terms for each. For example, the Tether or USDT stablecoin, you can receive 2.29 APY by lending or borrowing at 3.75%. Also, there is a promotion currently going on where you can be awarded an additional 2.71 in WMatic tokens. To gain even more information regarding the borrowing and lending for Tether, then click on it and it will take you to another more detailed screen. Here you can actually deposit or borrow this token. All collateral will be managed in your wallet. There is so much you can do with just this protocol, but I think you get the idea. There are several good instructional videos regarding how to use Aave, as well as most of the other protocols. I will suggest one and link it into this video. That's really all there is to get started into DeFi. Let's take a look at the history of DeFi, its market cap, and why I am so certain that this is the future. Although there is no one agreed upon date when DeFi was born, there are a few important events that made DeFi possible. 1. Bitcoin was released in 2009. 2. Ethereum, allowing for smart contracts, was released in 2015. 3. The Maker protocol was launched, and some other of the most relevant DeFi protocols existing today were funded in initial coin offerings or ICOs in 2017. And finally, the DeFi market just started to gain traction in 2020, so we are all still very early. The DeFi Pulse website provides a quick metrics for the total value of the entire space. As of the time of this video, the entire TVL is about 95 billion and growing. If I were to have presented this video to you, as I have personally discussed it with many of you, in the summer of 2020, the TVL was about 10 billion. That is almost a 10x. All of the largest investment firms seem to have lofty predictions. There are some industry experts predicting that the DeFi market grows to more than 800 billion by the end of 2022. And some are predicting the market can be 100 times larger within 5 years. That's not 100%, that is 100x. Only time will tell. There are some challenges to DeFi, but they are all being worked on by some of the best computer engineers, technology leaders, economists, and government officials in the world. Let's review some of these challenges. 1. Things are clunky to get the average user to participate. However, the rails and the infrastructure work is being developed to get the average users on board. Additionally, some banks are exploring how to offer these services to their existing high net worth clients. 2. Off-chain, real-world data must be integrated into smart contracts. There are crypto projects that are enabling this today. These are called oracles. For example, a DeFi contract may need to know a stock market price, access to sports scores, or access to weather data for insurance products. 3. There are expensive transaction fees, known as gas fees, for Ethereum. There are several changes in the works to reduce these fees. One is that Ethereum will be updating to Ethereum 2.0 later in 2022, which should reduce many of the fees. Also, there are separate Layer 2 blockchains that work with Ethereum, allowing greater throughput and less fees. So an example of this Layer 2 Ethereum blockchain would be the Polygon Matic blockchain. Number 4, DeFi needs interoperability between blockchains. Ethereum needs to talk with Cardano, needs to talk with a stablecoin, needs to talk with Solana. This interoperability is being solved by projects like Polkadot and Chainlink. Number 5, and finally, the crypto market waits for regulations from US government. There has been ongoing discussions in Congress. Some of the leaders don't understand this technology at all, while others totally get it. There will be regulations to help protect consumers, and these could start to come in as early as 2022. So how do you take advantage of DeFi? Number 1, invest. Let's quickly review CoinGecko.com. It lists some of the top DeFi projects and tokens that you could invest in. Another excellent resource is DeFiPulse.com. If you scroll down the homepage, you can see a listing of all the coins and tokens that are related to DeFi. If you have not already done so, I highly suggest that you purchase some Ethereum and some Bitcoin just to get started. There are several great exchanges out there that make it easy for you to get started. One of the exchanges that I utilize is Coinbase.com. Also, if you have not already done so, I highly suggest that you set up a MetaMask wallet and fund it with some ETH. Transferring Ethereum between an exchange like Coinbase to the wallet is easy. 2. Stake your assets. Go to a protocol like Aave or Compound and get a better return for your assets than your bank. 3. You need to prepare your business and community to interface with all these DeFi protocols. You don't want to be the bank or organization that doesn't know how to do this. Just like you don't want to be the last one to use email. If you need someone to give a blockchain or DeFi introduction to you, your business or organization, then reach out to me. Finally, let me say this. You can ignore DeFi, or you can wait till it comes knocking on your door and are forced to use it and invest in it. We are very much at the beginning of all of this new technology. This is all happening much quicker than anyone can imagine.